Welcome, dear traders. You are watching a recap of the Asian session. The benchmark stock indexes of the United States, Europe and the Asia dropped on a Wednesday. Only the Nikkei 225 showed a positive dynamic. It rose above 30,000 for the first time since September 2021, and the broader Topix index extended gains to hit a fresh 32-year high. Japanese stock indexes soared to new highs amid upbeat GDP figures. The economy advanced by 1.6% during the first quarter of 2023, topping the market consensus of a 0.7% growth. After a revised 0.1% contraction in the previous period, fresh figures fueled optimism. A jump in the GDP was mainly facilitated by an acceleration in private consumption and business investment. Meanwhile, Japan's net exports declined largely due to the weak national currency. This is why the yen lost momentum against the greenback despite positive macro stats. After downward correction below 136.5, bulls regained control. In the morning, the dollar-yen pair climbed above Tuesday's high of 136.60. Later, it reached 136.80. Given the strong bullish bias, the price may test 137.10, which is a high of a March 2. This scenario looks likely amid the weakening yen. In the Asian session, the pair was trading in the range of 136.20 and 136.90. It could drop even lower. Besides, the US dollar extended its winning streak that started yesterday. Although risk aversion is affecting sentiment, investors are certain that the US government will find a way to avoid a default. Therefore, an agreement on the debt ceiling is likely to be reached in the next few days. US Treasury Secretary Janet Yellen once again warned that the government needs to raise the debt ceiling immediately. The government could run out of funding to pay its bills as early as June 1. Investors are also worried about the Fed's monetary policy. There is no clarity about the regulator's future steps, and there is still time before the next meeting scheduled for June 14. And this is why investors are looking for clues in the economic reports and analyzing the speeches of the Fed officials. And here is a paradox. Traders see signs of a policy reversal even in the most obscure comments. For example, most of the comments made this week were hawkish. Atlanta Fed President Lafayette Bostic believes that the economy should brace for high unemployment and inflation. Chicago Fed President Austin Colsby said it was premature to discuss interest rate cuts. However, investors seem to pay more attention to economic reports rather than the statements of the policymakers. They are still betting on a pause in aggressive tightening. As of Wednesday morning, almost 81.4% of speculators expected the Fed to shift to a dovish stance. The US dollar managed to climb after the consolidation phase, and the US dollar index touched the upper border of the range of 102.50 and 102.90 and then retreated to 102.8. The greenback kept growing even despite a drop in the US Treasury notes from their two-week highs. It seems that the protracted negotiations on the debt ceiling have increased demand for safe haven assets. Hence, the US dollar is gradually growing to 103 points. It may break above the April high of 103.05. Risk aversion and weaker than expected macro stats from the US and China affected the movements of Asia-Pacific currencies. Analysts fear that the slowing economies of the two largest oil consumers will inevitably lead to a drop in oil prices. And this will be extremely negative for the Aussie as a commodity currency. The Aussie remains vulnerable to changes in a risk appetite and the trajectory of the US dollar. In the Asian session, the AUD USD pair was moving in the downward range of 0.6629 and 0.6672. As the economic calendar was empty in the morning, the Australian dollar dived to 0.6639. The Aussie may recover tomorrow after the release of the employment report. If the labour market remains resilient, the Reserve Bank of Australia will get confirmation that a rate hike was the right decision. If so, the Aussie could recoup some of its losses. The New Zealand dollar kept climbing. However, after yesterday's gradual rise, its trajectory on a Wednesday looked more like a roller coaster. The Kiwi was rather volatile on the time frame, hovering in the range of 0.6229 and 0.6255. At the end of the Asian session, it grew to 0.6247 amid internal factors, and they are now pushing the Kiwi higher. There are two bullish factors: a rate increase by the central bank and the publication of the federal budget for 2023. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.